Good afternoon, everyone. In today's video, I'd like to talk about using 0 days to expiration SPY and SPX options to trade the futures volatility box moves. That's to say, to use SPY and SPX as a substitute for the ES futures contract. Now, the setup for which all of these numbers are based off of is our futures volatility box fade setup. Today, that came in at right around 8:40 a.m. Pacific when price action fell inside of our volatility box clouds, and we had an opportunity to buy this dip and try and play this reversal, which you'll notice today ended up giving us a really nice reversal point from our entry point towards the max of the day. I think we were up close to 42-ish points for a max gain of right around 1%. So a phenomenal day if you held on. However, holding on to a futures contract all day is much more difficult than holding on to something like, say, an out-of-the-money SPY options contract. So we'll take a look at a few different ways that you can use options to try and play some of these moves for those of you that are either options traders or both futures and options traders. So now coming into the data first, let's compare it to the baseline, which is the full-size ES futures. Using the full-size contract, our T1 is at 5.75 points, or a dollar gain of $287.50. And similarly, that's what we're willing to risk as well. Now, if we start with SPY options first, this is again 0 days to expiration options, so the one that expire in today's case today. And we have 3 different series here: out of the money, at the money, and in the money in terms of delta. The out of the money options perform the best if you held them all the way towards the end of the day. They had the highest max gain, going from 28 cents all the way up to $2.85. But if you were looking to play just that T1 move, the at the money options were the best with a gain of 25%, going from 60 cents all the way up to 75 cents. So that's the takeaway there. If you're looking to try and play just a T1, the at the money options are better, and that's really for folks who don't prefer trading futures. You'd like to use the options contract as your substitute. The at the money options are the way to go there, and today they were the 393 strikes. If you're looking to try and mix and match, the at the monies and the out of the monies would be the ones that I would mix and match with. The at the monies, the ones looking to try and take off at T1, and the out of the monies, the ones you're looking to try and really get a home run trade out of, which in today's case was a max gain of 918%. Now let's contrast this with the SPX options here. Very same structure: out of the money, at the money, in the money. The SPX here, out of the monies were again the best ones, but the gain was a bit smaller here, 574% compared to the SPY's 918%. That's where the option went from $4.70 all the way up to 31.70. You do have the benefit of it being cash settled, so that's one gain there. But outside of that, from a pure percentage standpoint, SPY did a bit better. Here, the interesting thing for T1, the at the money and in the money options today tied. So my bias again would be to focus in on the at the money options, considering that those are the cheapest ones for folks who are looking to try and play the at the monies as a substitute for the full size futures contract. Now, for most futures traders, I think the ideal plan would be using the futures contract here to try and play that first target move. That's really the cleanest in terms of both commission, in terms of clean tick values, in terms of just keeping the trade simple and having it work for itself. And then having SPY options here for any runners beyond even the second target, which is our gray dashed line on the futures volatility box, right? The gray target here took us out at 7-ish points on the S&P 500 futures, and that's usually a nice gain. 7 points on the S&P 500 is close to $350 minus commissions. That's still a healthy amount. However, you'll notice today how much more we left on the table. That was right around 0.84% or 33 S&P points. Well, using SPY options here gives you another way to try and take advantage of that, which doesn't really cost you a whole lot of money, 28 cents per contract, but it does give you the ability to try and play some of these major home run moves in which that 0 days to expiration starts to skew the risk reward in your favor and really sets you up for a nice gain. All right, I hope this video helps for all of our futures and option traders, giving you examples of what SPY versus SPX looks like, along with SPY and SPX versus the ES full-size futures contract, and how you can mix and match the different asset classes and vehicles and contracts based on your objectives. All right, take care, everyone. Good luck trading, and we'll see you in the next update.